Welcome to a presentation on audit report. I am Asha, Assistant Professor from Crystal Jayanti College, Bangalore. In this presentation, let us understand the meaning of auditing and what is an audit report and what are the different types of opinions that can be expressed by an auditor in the audit report. First, to understand what is auditing, auditing is a thorough examination of the books of accounts of a particular company done by an independent external auditor who is appointed by the shareholders. This auditor examines the books of accounts of a company, that is, the income statement and the balance sheet, and gives his opinion saying that the balance sheet and the income statement project a true and a fair picture, which means to say that they are accurate and authentic. So the auditor gives this opinion about the books of accounts in his report. So what is an audit report? An audit report is a last part or last job that is being done by an auditor. So what does he do in this is he gives his opinion. It's a written opinion given by an auditor regarding the entity's financial statements. So the company for whom he would be appointed, he would examine the books of accounts of that particular company and he would give his opinion about the books of accounts of that company in his report, which is called as an audit report. Now, this report is a written document that will have to be maintained in a standard format that is mandated by generally accepted auditing standards. So, in this report, there would be variations that would be given about the opinions about the different companies. Each company would be maintaining their books of accounts in different ways. So, there would be different statements that could be given by an auditor. And these statements can vary from one company to another company. So when an auditor is giving the report, he makes sure that these topics are covered in his report. What are the topics to be covered? The topics that needs to be covered is what is the responsibility of the auditor and the management of that particular company? What was the scope of the audit? Was he expected to audit only the cost records, so which would mean cost auditing? Or was he expected to audit the entire financial books of accounts, or was it to just make a management accounting? We would just examine the records of the policies and standards that are being maintained by the management. So he will have to define whatever is his scope. And then he will also give his opinion about the entity's financial statement. There are different types of opinions that an auditor would express in his report, and this would vary from one company to another. So, the four important opinions that he expresses are: first one is called as an unqualified opinion. Now, what is an unqualified opinion is? It is also called as a clean opinion. Now, this is the best opinion which every company should be getting from the auditor. So according to this, what does it say is the financial records of the company are free from misrepresentation, which means to say that the documents are authentic, the records are authentic, the financial statements are authentic. They are free from any kind of a misrepresentation. It's not just they're free from misrepresentation, they are also maintained according to the standards of GAAP, that is generally accepted accounting principle. So these are the two main things that will have to be looked into in unqualified opinion. One is that they are free from misrepresentation, and second one is they follow the standards of GAAP. And in this report, another important point to be noted is the auditor uses the word independent. When this word independent illustrates that this is an unbiased report that is being prepared by a third party. So this report will generally have the main title and it would be of 3 paragraphs, main body highlighting the responsibilities of an auditor, the purpose of the audit and the auditor's findings. And this would be signed by the auditor and documented with date and address. And this is the best opinion that every company should be getting from their auditor. Second one is about qualified opinion. Now, what does this qualified opinion is? There is a condition that is there in the opinion. That means it says that it is not qualified for a particular reason. And what is it? It says that this financial records have not been maintained according with GAAP. Okay, but according to this qualified report, they are free from misrepresentations. That means there is no fraud that has been committed in this particular company, but they have not followed the accounting standards. That is the expression that is being given in qualified opinion. And this means that there has to be some changes that needs to be made in this particular report. But it is almost similar to unqualified opinion. The third opinion is called as an adverse opinion, which will not be expected by any business entity, because this is an opinion that is being expressed by an auditor wherein he states that this books of accounts do not conform to the GAAP. That means they have not followed the principles of the GAAP. And second thing is they are grossly misrepresented. That means there are frauds that are being committed in maintaining the books of accounts. Though there may be some kind of an errors that could also be committed, which may be unintentional, but there is high possibility that there would be certain frauds that would be committed in recording the books of accounts. So when such an opinion is being given by an auditor, it is advisable for the company to rework on their financial statements and to get it re-audited by the auditors, because the stakeholders like the investors, the lenders and the other stakeholders will not accept these kind of an opinion. So this will have to be revised by the company. The last kind of an opinion is called as disclaimer of opinion, which means that this is, in this particular case, the auditor is not able to give an accurate audit report for a various reason. Maybe there is an absence of an appropriate financial record, so because of which he says that it cannot be determined and the financial status cannot be determined, so he is not able to give an accurate audit report. So these are the four kinds of opinions that can be given by an auditor to the company. So the first one was unqualified opinion, second is qualified opinion, third is adverse opinion, and the last one is called as the disclaimer of opinion. So that is about the different kinds of opinions that are being expressed by an auditor about the company. Thank you for listening.